It's the rules of the game that dictate how the game is played. Change is inevitable, but we need to have guardrails in place to prevent real structural negative effects going forward. The economic power of a single business loan was extraordinary.
Kevin Shivers, welcome to the podcast. We're excited to have you here today as our special guest. I know you're president and CEO at the Pennsylvania Association of Community Bankers, and I just want to extend a warm welcome to you. Thanks for being here.
Delighted to be here. Thank you for the opportunity. The SR Snodgrass team has been great partners, not only to our industry, but to our trade association as well. So a delight to with this opportunity to speak with you and to talk with your clients and other listeners about issues relating to community banking. So thank you.
Of course. It's a topic that is near and dear to our hearts for sure. And you kind of took my words there too, because I wanted to thank you for your many years of partnership and support as well. We're happy to be associated with the PACB for sure. Let's get started. We want to learn a little bit more about you and your background, because I know that you have a banking history. Can you give us a little bit of an overview?
Sure. I grew up in a community banking household. I was raised in Connecticut. My mother worked for a small savings and loan. It was at the time the oldest savings and loan in Connecticut, Society for Savings, which was ultimately acquired by what is now Bank of America. But some of my fondest memories of childhood was sitting with my mom. She was a lender, and we would be at the kitchen table, and she would bring home stacks of loan applications, and she taught me as a 9-year-old how to do the underwriting. And so she gave me a matrix, and I would sit at the kitchen table with her, and I would sort through the piles based on the matrix. And, I think to myself, like, how many homes and, how many dreams was I able to be a part of with that experience? Great life lesson for me. And it was early in my career. I was in public service at the time. I was working in the state legislature. And then later worked for a governor named Tom Ridge. Mm-hmm. And, Governor Ridge is, when he was in Congress, was served on the banking committee. But he also was very supportive of small business and entrepreneurship. And so having that perspective of the impact that community banks could have locally, and then being able to work with a leader like Tom Ridge, who supported entrepreneurship, small business, understood the value of America's banking system, and the economic power that it delivered, was foundational for me as I developed in my career. So had an opportunity to work in his administration, serve on his personal staff right up through 9/11. When he departed for Washington as our nation's first Homeland Security Director, I stayed on with Governor Schweiker, helped him to set up his office, and then I needed to figure out, what am I going to do now as an adult? What's next? So I decided to leave public service to go into the private sector. And I started work with an advocacy organization called NFIB, the National Federation of Independent Business. And for 17 years, I worked with entrepreneurs all across Pennsylvania to promote regulations, legislation that would encourage small business and entrepreneurship, which is the driver of our economy. And it was through that experience I had an opportunity to work with my predecessor here at PACB, because small business and community banks are aligned in so many ways. 70% of the small business loans are generated through community banks, and when you take a look at nearly 80% of all of our farm agricultural loans through the community banking system, there was a lot of synergy. And when my predecessor, Nick DeFrancesco was his name, reached out to me and alerted me that he was going to be leaving the organization, and thought, boy, you might want a career here. I knew several of the board members because we worked together on so many issues. There was a lot of alignment between my work in support of entrepreneurs and the work of PACB as a community banking organization in support of their small business customers.
So I hear so many steps along your path that really led you to this, and hearing the ties starting back to, watching and helping your mother with her job. I mean, that's truly a heartwarming story. And I really thank you for sharing that. When we talk about the PACB, I'm kind of curious if you can tell us a little bit more about what the mission is, what drives the PACB, what's at heart there for the organization.
For community banks in America, it's a very basic business model. We take local deposits and we reinvest those back into the community in the form of home mortgages, small business loans, car loans, personal loans. In addition to that support, uh, community banks will reinvest in their local communities through volunteer hours, through direct investments in charitable causes. Um, the oftentimes in a community bank, the CEO's office is directly behind the teller line. So if you're looking for personal service, you're going to get that. It's an entity that still does business with a handshake, and you're going to get a level of service with your local community bank that you would never see with a large national bank that has too many other clients and, quite frankly, too many other things that they're working on to really focus on your small business or your home loan. And it's extraordinary work. We've powered the American economy since the founding of our
Hmm.
nation, right? And so when you think about America's 250th birthday, there are institutions in our membership that are over 160 years old in some
It is
instances.
amazing.
It truly is extraordinary. As well, when you take a look at these institutions, many of them provided support to immigrant populations who were underbanked or not banked in America. And even this exists even to this day. We have banks, Slovenian Savings and Loan or Slovakian Savings and Loan or Asian Bank, who were founded to support specific immigrant populations in America, in Pennsylvania, and to give them that opportunity to open a bank account, to be able to conduct business activity, or learn, be able to obtain a small business loan, a home mortgage, et cetera. So truly extraordinary.
And my understanding too is with the PACB that you also have a legislative component as well. Can you share a little bit about that and what some of the your recent doings and focus has been there?
Absolutely. And so our mission is to help our banks to positively impact their local communities. We do that through professional development and helping to ensure that our bankers have the best training to be able to serve their customers. But advocacy is an extraordinarily important component to that, Lenore, because our job as an association is to watch policy and regulations that are emerging at the state capitol and at the nation's capital in Washington, to be able to share what we learn with our bankers and to get their feedback, to be able to communicate that to lawmakers either in Washington or in Harrisburg, and to be able to communicate that and to help to create a level playing field so that these institutions can compete fairly and to be able to succeed and support their local communities.
Longevity too is kind of what, continuation of services and all of that. So let's also talk a little bit about what are some initiatives that the PACB is endeavoring in right now. What are some of your focus overall? I know you're interacting with your member banks quite a bit too. Share a little bit about how that direction's going.
Yeah, we're really at an inflection point right now in the financial industry. By virtue of their size, many of these community banks struggling with the cost of regulation. You have new actors entering the industry or the
Hmm.
market. We hear on the news these things called stablecoin and cryptocurrencies, and people are like, "What are we talking about?" We're hearing a lot about payment systems today in the news and issues before Congress. In addition to that, you've got issues like competition and interest rates, and there's just so much going on right now relating to the financial sector. And for many community banks, the outcome of these legislative debates and these regulatory battles could be the difference between a community bank surviving in a local community or not, being taken over by a large biggie bank or leaving the community altogether. And we've seen the research that shows that local economies actually do worse when a community bank leaves their local area. And we're losing community banks at about 3%, a rate of about 3% a year right now. It's a little bit better than average in Pennsylvania compared to the national average, but that amounts to about one or two banks a year that are closing their doors. One of the biggest priorities for our organization is, business churn is a natural in the economy, but what can we do to create an environment where a group of investors would want to come together and to be able to start a bank? Right now, it takes about $25 million to de novo a bank, which means starting up. And, right now, with the cost of regulation, it's just a lot easier for a group of investors who have 25 million to maybe invest that in some other industry and to see a better rate of return. And we need to change that conversation. So we're working with our regulators in Washington, with the administration, with Congress. What can we do to change the rules to make that an attractive investment? Because when people invest into a community bank, that money is then redeployed into the local economy, and you see the activity that results, the economic activity. But we're at a point in our history where we're not seeing those types of new bank formation. So that's a big priority for us: is what can we do working with our regulators to create an environment where investors see starting a bank as an attractive option. It's okay. There are lots of times you're going to see acquisitions happen. That's just part of the business cycle. But if you don't have the inputs on the other side of the balance sheet, that becomes problematic for us. So that's the first thing. How can we create an environment for new banks to start, to form, to grow, be successful? The second issue we talked a little bit about are the new payment systems that we're seeing. We're at a point where in my lifetime, we've gone from, cash payments to checks, to debit and credit cards that we used to have to run through a machine. Now you just tap and pay. And now we're at a point where payment systems they're on your phone, and you don't even need to pull your wallet out. You can just tap your phone onto the machine, and a transaction happens. And payments are getting faster and faster and faster. We're concerned because as we add new payment systems, the potential for fraud becomes even greater. We're hearing now about these cryptocurrencies and these stable coins, and there are a lot of consumer concerns that we have over those types of transactions. Certainly, those are not, stablecoin issuers. They're not FDIC insured. So consumers of stablecoins. There's also a concern that when a dollar is invested in a stablecoin, that's one less dollar that a bank would have to be able to redeploy into the community to make a loan. We're estimating the ICBA, the Independent Community Bankers of America, is projecting that by 2030, 4 years from now, $1.4 trillion will leave the community banks in the form of deposits and move to these stable coins. Well, that's a lot of money. Effectively, we're talking about almost $850 billion in available capital to loan to small businesses and to homeowners that's going to be leaving the community banking space. And the real question for policymakers that we're raising is who's going to do the home mortgages? Who is going to underwrite the small business loans? When you're seeing that type of deposit flight, the potential risk of deposit flight, that raises serious concerns about driving that economic engine. We think stable coins and cryptocurrencies have a place as a payment system for sure. But now when we talk about allowing these stablecoin issuers, who again are non-bank actors, to pay interest in the form of rewards or yield, that is going to dramatically impact the economic system, the financial system as we know it today. Change is inevitable, but we need to have guardrails in place to prevent real structural negative effects going forward. So that's a big issue for us that we're watching both in Washington and in Harrisburg.
And I was just going to ask, how do you do those guardrails? Is that primarily regulations? Is it policies? How do you work around that
It's
to
a
make sure?
combination of all of it, right? I always look, Jerry Seinfeld had a great quote, and he said that lawyers are the only ones that read the top of the game box. And really it's the rules of the game that dictate how the game is played. And so our job as an organization is to be a part of that rule-making process and to make sure that the rules are written in a way that allows community banks to be able to compete with these other non-bank actors. And so that's the place where we are right now is we're setting the rules for how this new system is going to flow. Ultimately, once the rules are written, then there will be regulations that will then share how these laws are to be interpreted by these non-bank actors and banks, et cetera. So that's the critical point where we are right now. If we get it wrong, this could fundamentally shift and change the way that the American economy operates. I don't want to sound, too negative about that, but this is one that we have to get right because we're talking about global conglomerates that would be offshoring a whole lot of trillions of dollars in capital from banks, which would not be available to reinvest in the local community. They'll be able to get that money somewhere, right? Banks will
Right.
be able to borrow from the Federal Home Loan Bank system or, from the Federal Reserve, but the cost of funds is going to go up. It's going to be more expensive for banks to be able to get access liquidity to be able to lend that out. So how that translates to your average consumer is interest rates are going to go up on that small business loan or the home mortgage. Maybe your credit rate score, you're going to need a higher credit score because those funds are going to be more expensive for that bank to lend out. Well, nobody wants to hear anything that I've just mentioned, right? We
No,
don't want to hear
not at all.
higher interest rates. We don't want to hear higher credit scores. Like, why can't we just keep the system the same? And those are the kinds of questions we're raising with policymakers as they are, contending with these big policy issues in Washington and at the state capitol in Harrisburg.
I want to hear about what's coming up in the near future for you. What kind of things really have you excited about where the direction is heading for community banks and some events or other things that you're just excited for?
We're excited about America's 250th birthday, right? And you think, as I mentioned, we have financial institutions that have were chartered nearly at the formation of our nation. And so we're going to be spending the summer having a conversation with Pennsylvanians about the great work that these community banks do, educating our consumers about the long history and the alignment that community banks and America, as our founding, we've invested in the local community to highlight the great work that these community banks are doing throughout Pennsylvania, throughout America. We have different types of financial institutions, Lenore. You have these stock-held banks. So these are banks that are owned by shareholders, investors. In Pennsylvania, we're a state which has attracted a large number of, we call them mutual banks or thrift institutions. And these are financial institutions that are owned by their depositors. So they don't have to pay dividends to shareholders, but they have a unique role in the economy where they're supporting their community, but they don't have to worry about the pressures of investors to pay dividends. They're reinvesting those dollars, those profits back into their community, supporting their depositors, supporting that local community. So we'll be supporting mutuality as a terrific form of community banking here in Pennsylvania. We'll be celebrating America's birthday at our convention in September. It's a chance. There are over 100 community banks here in Pennsylvania. This is a chance for us to take advantage and promote the great role and the work that we do as supporting the American economy.
Where is your convention at this year?
It's going to be in Colorado Springs.
Okay.
So
Nice. It sounds like there's a lot of great things coming up then in a great way to continue to celebrate the accomplishments and achievements of community banks in America, past and going forward. Any final resources that you want to share? Obviously, PACB has been a great resource for us and a great partnership, but anything that you want to share to our listeners about how to be involved, how to make a difference, and how to continue supporting community bankers?
Really appreciate that opportunity. I would encourage your listeners to visit pacb.org to learn more about community banking, to learn more about the community banks that we represent, and to learn more about the valued partners that we utilize. Our community banks are able to make that positive impact in the local community because of great partners like SR Snodgrass that provide extraordinary financial support, strategic support to our community banks.
Thank you so much for joining me here today. Greatly appreciate your insight and your time spent here. And we'll ask people to reach out and connect with you on LinkedIn to further conversations.
Thank you.
Thanks for joining us. We hope you enjoyed the content. To learn more about Snodgrass, be sure to visit our website, follow us on LinkedIn, and subscribe to our podcast as well.